action, focus, discipline. This is the Zero Excuses podcast. Each and every week, we talk to high-performing, inspirational athletes, entrepreneurs, and leaders. We ask powerful questions to extract their tools, strategies, and life lessons for you to crush your excuses, to break out of your comfort zone, and accomplish your ambitious dreams and goals. Here's your host, Kenyon Zitska.
Hey guys, welcome back to another great episode of the Zero Excuses podcast. Thank you for tuning in. We have Shane Connor from Red Rock Capital Group joining us today to talk to us about alternative investment strategies, investing in commercial real estate, and why it's important for us all to create multiple streams of income. But before we get into today's interview, just have a few quick reminders for you guys. Number one, if you haven't already done so, please go to iTunes and leave us a rating and review, as well as sharing this episode with any friends, family, or coworkers who might get some benefit out of listening to the topics we talk about here on the show. Would greatly appreciate that. Appreciate everyone who has taken the time to do that already. We've got over 40 5-star reviews, and that helps us get the message out about what we're doing here and helps people find us. All you got to do is go over to kenyonzitska.com/iTunes, and it'll take you right to my iTunes landing page. Second, if you haven't already done so, please go ahead and join our closed Facebook group. It's free. You can go over to kenyonzitska.com/group and join the close to 500 folks in there who are engaging in conversations around everything that we talk about here on the show. It's a great group, and it's very respectful, and there's no BS going on in the group. And lastly, if you're interested in taking these topics to even deeper levels than we have in the Facebook group and want to work a little closer with me on implementing these into your life and want to surround yourself with people who are doing the exact same thing, encourage you to join us in the Infinite Results Mastermind group. It's a very tight-knit group of men who are implementing the very tools, the strategies that we talk about here on the show. If you've been on the fence about joining, if you've been following me for any length of time, I am going to be significantly increasing the price on this at the end of the month here, starting September 1st. So if you're interested in joining, you can go over to kenyonzitska.com/results and fill out a short application to be a part of the mastermind. It's just a short application. Make sure that we're all a good fit for each other, and then you'll be rocking and rolling. I also have a one-on-one discipline coaching program. If you're interested in being placed on the wait list for that, I don't have any slots open at the moment. You can head over to kenyonzitska.com/discipline to apply to be a part of that as well. All right, guys, without any further ado, let's get into today's show. Shane, welcome to the Zero Excuses podcast. Appreciate you taking time out of what I'm sure is your busy schedule to join us here tonight. Excited to have this conversation with you.
Kenyon, it's a pleasure to be on. And yeah, absolutely. It's a Monday night and been going for about 13 hours straight, but I love it.
Yeah. You and me both. Just got my daughter down to bed, but I'm ready to rock this interview out. But Shane, you're from the Red Rock Capital Group. That's your company that you use to help people invest in commercial real estate.
Absolutely.
And why don't you go ahead and introduce yourself? Tell us a little bit more about you and what you do.
Sure. Love to. So thanks again for having me. My name's Shane Connor. I'm from Philadelphia originally. I've been in Atlanta, Georgia for 6.5 years. Got down here by way of my full-time company at work, national staffing and recruiting firm, who gave me the opportunity to open up an office back here in 2012. And kind of jumped in, to the unknown there. I was 25, didn't know anybody, and took my dad out for a beer and said, hey, what's the worst that can happen? So hopped in a U-Haul truck, drove down here. About almost 7 years later now, things are going well. And about 3 years ago, I was having some really good income years. I'm a W-2 kind of sales producer, so very heavily commissioned involved. Mm-hmm. And, wanted to start doing some stuff outside the traditional stocks, bonds, 401k type of thing. And through that research and some conversations, I landed in commercial real estate, investing through private syndications. And I've been doing that ever since, continuing to kind of hustle, make my sales commissions, and invest them on the side. And then through that, I forged some strategic partnerships that allowed me to kind of create what is, Red Rock Capital Group, where I now continue to invest, but I also help other private investors or busy professionals in the sales world, or we work with a lot of doctors, lawyers, anybody who's just got more money than they have time to dive into real estate on their own. We help them access these private investments that you just would not know about unless you knew somebody on the inside.
So what specifically drove you to start pursuing this? What was the motivation behind that?
Yeah, from the investing, or kind of to taking it a step further to helping other folks?
Take it a step further to help other folks, because I really think that helping other people get what they want is a key to getting what we want. So.
Yeah, well, I think that's a great point, and honestly, I think it was just the sheer eye opener that I kind of went through, and you always kind of have this thought in your head that any apartment building you see is probably just owned by some Wall Street bank, right? But that's actually far from the case. Many and most, Class B plus buildings that are probably built now in the late 80s, early 90s, most likely are probably owned by private investors and probably a group, or what we call a syndication of private investors. Mm-hmm. And I was just kind of really mind blown in this whole world and the opportunities that are there to be earning probably 1.5 to 2 times on average what you're going to get in a common, mutual fund or ETF. Not that there's anything wrong with that. I do believe in diversification, but this is just a very kind of unknown world. And because of SEC regulations, you're not going to find these deals advertised on, Facebook or somebody standing on the side of the road. It's kind of, you have to kind of be in the know. So, I had an opportunity to kind of assist with some of our partners and help them fund their deals. And conversely, I help, private investors and folks like myself who are in busy jobs grow their wealth through, very carefully vetted and secure, real estate investments.
So why didn't you just kind of keep this to yourself? What was your specific motivation to help other people? I mean, not everyone, a lot of people are selfish with some of these secret gems that they tend to, stumble upon. Why are you motivated to help other people?
No doubt. Well, don't get me wrong. There's definitely some motivation for myself. I'm obviously, compensated in some way from our partners and helping them reach their funding goals. But the reality is, there's more deals than there is capital to go around. You start taking 4-7 of these down a year. That's a lot of investment for anybody to be able to participate in all of them. So we're not lacking good deals. We're lacking good private funding. So we really need to continually find new folks to bring them into the fold, show them how this works, get them involved, let them see the returns so that we as a group can continue to go find the next round of investments. And if we were just focusing on ourselves, we would run out of money pretty quick.
Yeah.
So we do invest alongside our investors, but as a team, we're able to do that much better than just me. To be honest, like you said, I've got a wife, I've got a house, I still have a full-time job. I'm stretched pretty thin, but as you get more people involved, you can hit, $3 to $4 to $5 million funding raises because you're bringing in 50 to 60 investors on a particular deal. So I am, my interests are aligned in helping folks access and grow their capital, but I also have, some compensation on the back end from our partners. When we hit certain funding goals, I get a few free points in the deal, nothing to write home about, but honestly, I really just do enjoy bringing in other investors and let them see this world. In about 3 to 5 year projects, they can double their capital where they really couldn't do it anywhere else.
Nice. So I know this is probably a very complicated process, bringing in investors and then, seeing a deal from start to finish. Probably a lot more, it's going to take a lot more time than we have here, but can you maybe quickly give us an overview on exactly how this works and maybe why this is a wise investment choice if someone's looking at something other than an ETF or a stock or bond or et cetera?
Yep, absolutely. And I really encourage folks to start just doing their own investigation, learning, and homework now or way before they're ever ready to invest, so that when the opportunity does present itself, they can move forward quickly. But at a high level, so we have operating partners who are constantly out there. These are professionals. That's all they do is run these commercial real estate operations. They're constantly underwriting potential deals. For every one deal we bring to market, they've probably passed on 15 to 20. Because we focus on conservative underwriting, number one. We're all about protecting investor principal. Reputation and integrity are everything in this industry. And if you don't do right by your investors, you're not going to have them back and you won't last long in the industry. So our partners will find a good deal. And let's just use an example. One, we've recently closed 300-unit apartment building in the Texas marketplace. They will basically put that building under contract. Through the underwriting, they will figure out what the raise amount they need is. It's typically around 33% of the purchase price. So could be we're looking to raise $10 million on the private investing side, and that's going to fund the acquisition, the legal and operating costs of the private placement memorandums, the down payment, and all of the capital expenditures up and into including the business plan. So typically this building, it's already producing income today. And that's a very important point that I want your listeners to understand. This already produces income today. If we did nothing else, we could pay the preferred return schedule, right? But most of the money is coming from the forced depreciation. These buildings, like I said, probably late 80s, early 90s, still in great condition, great bones, fully occupied or close to fully occupied today, but they need a facelift, right? You need some modern appliances. You need some upgraded tiling, So we're going to come through that over a 2-year period. We're going to totally renovate the property. We're going to call what's reposition it. We're going to rename it. We're going to rebrand it. We're going to bring in our property management, which is going to drive efficiencies, right? So in commercial real estate, we're trying to drive the net income by increasing rents and drive down expenses through efficiencies. And after that 2-year business plan is kind of executed, we'll refinance the debt typically, which we call a liquidity event. So as an investor, you're going to get a large chunk of your principal back. And then we'll just continue to pay that preferred return as we stabilize, what we call stabilizing the asset. And then after that 4th, 5th year period, we're going to sell that property typically to a large Wall Street REIT or institutional operator who's just looking to add a nice, stable asset to their portfolio.
Okay, that makes a lot of sense. So essentially, you're just taking something that may be on the downward trend, and then you're reversing that trend, and then just kind of
correct,
or maybe new life into it. Yeah,
or maybe not even on a downward trend. It's just sitting there with some deferred maintenance, but maybe a group bought it 10 years ago, and now the price is just too good for them not to sell, right? But there's still a lot of equity that can be driven into that property. And easiest way for, somebody who's not used to this to picture it, everybody knows, house flippers, right? You see it all over HGTV. It's the very same concept, but we're flipping a 300-400 unit apartment building over a 5-year period, as opposed to flipping a single family house over a 4-month period. We're going to acquire it for said value. We're going to do all the work, force the appreciation, bring it to a new value, and then sell it. But the difference between the single family home model is we're not worried about comps. It doesn't matter if across the street there's another 400 unit building built in 1988 that's listed for X million. It's how much money does ours spit out in net operating income. So that's the difference. In commercial, your valuations are driven on net operating income. So it's how much money does this thing return at the end of the year? Revenues, rents, minus expenses, is what's left over.
Mm-hmm. So you mentioned a little earlier a term, preferred return rate.
Yep.
Can you explain that a little bit and maybe dive into that a little bit? Because that sounds like an important term that folks should understand.
Absolutely. And everybody likes to, think in returns. They understand like the S&P 500, what that returns, what their ETF might return. So on a typical investment, you may have a preferred return schedule, typically somewhere between 8 to 10, sometimes up to 11%, meaning as a limited investor, you're going to come in as an LP, limited partner. You're going to be paid a preferred return, could be monthly, could be quarterly, and that's annualized. So every month or quarter, you're going to get 8% of your principal paid to you, right?
Mm-hmm.
And then that's going to be carried through the life of the project. It could be caught up if it takes a little while to get the business plan going, but all in told, you should be said, if it's 8% over the life of that project, you should be paid 8% annually on your principal.
Mm-hmm.
And then on the back end, you're going to have equity on the sale and the profits. And typically that's going to come from some type of split. Usually it's 80-20, sometimes it's 70-30, meaning 70% to the limited partners, 30% to the general partner who's kind of organizing that project.
Okay.
So what you want to look for as an investor, whether it's one of our deals or some other deals, you kind of want to look at, in that deck, are you aligned with the interest to the sponsor and the operator? And is everyone moving in the same direction?
Mm-hmm. So why are some of these types of investments starting to bubble up to the surface, whereas maybe a few years ago, maybe people were simply looking at REITs or ETFs or just stocks and bonds? What's kind of changed in the investment landscape in the past few years? I'm seeing, groups such as yours starting to bubble up here, and honestly, this is something that's starting to get the wheels turning in my brain here.
Yep. Good question. And, honestly, before I went searching for it, I had no idea that it was there. There's been a lot of change in the industry. The Jobs Act was, a regulation that was passed a few years back, which allowed basically small companies, small businesses to raise funds through, the internet. So that's where you're seeing a lot of the crowdfunding sites. On the realty side, you have some good platforms like, Realty Shares or Mogul. And then a lot more private groups like people that do what we do have sprouted up because I just think the word has kind of gotten out. People, podcasting world, you and I are on a podcast right now. This could reach a variety of people. Because you can't go out and simply advertise this, I've got, say, 4,000 connections on LinkedIn. I can't just download all those emails, take my investor deck, send it out, and hope maybe 30 people say, hey, I'm interested. So it is more of a grassroots kind of operation, but it has been gaining in popularity as more people, start to see, wow, I can get twice what I'm getting in the equities market or in this particular investment. Everybody starts to tell their friend and so on and so forth. I've been doing this for 3 years now, and I'm moving my investing percentage slowly less and less in the market of equities and more into these private investments. And that theme is very common from the world that I play in now and the people that I talk to. Once you start to see the returns you're making, it's hard to think, well, why am I going to go back to this bucket? And I think to your point there, it's just gaining more attention and more popularity. Now more operators are trying to get in, but it's a very tough market. Like I said, our guys, they probably pass on 15 deals before they make an offer on one because it's got to make sense. Most importantly, to their investors, they have to be able to return what they say they're going to return, or they're dead in the water. Nobody's going to come back and invest with them. So that's why we carefully select about 5 or 6 groups that we work with, and that's all.
Cool. And is there a minimum investment? Is it $1? Is it $10,000? What do we have to come to the table with to start getting involved in this?
Yeah, absolutely. Right now we focus primarily on accredited investors only because we operate under Regulation 506. Some deals are $25,000 minimum. A lot of deals come in around $50,000. As an accredited investor, you can meet that in a few different ways. if you're married, that's a joint income of $300,000. If you're single, just a solo, that's a prior income of $200,000. Or it could be a net worth of $1 million, excluding your primary residence.
Mm-hmm.
Now, you can also invest as an entity, so business if they meet those same requirements, or a trust if they meet those same requirements.
Okay.
That being said, I am seeing more deals that are letting some non-accredited investors in on particular allotments, and I am seeing some more operators that I'm talking to personally that are outside of that core group that we support, that are a little smaller level, that we would have more entry points, at that 10 or 15 or 20,000.
Okay. So would, for example, I've set up my own qualified retirement plan, basically a self-directed 401k. I had to set up an LLC to do that. Would that fall under that umbrella as well?
Yeah. A lot of people choose the self-directed IRA route when they're investing in these investments. And I'll tell you why that's a good play, because a lot of the challenge in people grasping this concept is they're just not, they know what they know, right? They go to work, they get their check, they put it in their 401k, and they set it aside. So when you're talking about the self-directed IRA, that's a long-term strategy, right? You're not planning on touching that money anyway for 10, 15, 20 years, depending how old you are. So what you're doing now is all you're doing is taking it from, maybe it's with Fidelity or one of the large institutions, and it's earning 4 or 5%, if that, and you're just moving it over to this bucket to a custodian. We work with a few specialized IRA groups that will then write that investment for you into our private placement, and it's just going to sit there, collect that interest, make the equity, earn the profits, and then you decide maybe you'll plug it into another one. Maybe you'll take it back and put it back into Fidelity. It's up to you. But we see a lot of interest in folks using their self-directed IRA because it's more of a, I'm not really trying to take this money anyway, so I'm good with leaving it long term, if that makes sense.
Yeah. And kind of circling back a little bit to the preferred return rate that you mentioned, is that something that you can turn around and reinvest some way, somehow, to kind of maybe get some compounding interest going on this? Or
yeah, so great question. I've personally been using that strategy myself over the last 3 years or so. So, right, you make your initial investment, the distributions start to come back in, and they start to pile up, right? You kind of got this pot that's growing almost like a snowball. Maybe it's 15 months later, another deal comes your way, right? And maybe, okay, now I've made a certain amount of money back on this deal. I only need to take a little bit of capital out of another bucket. Now I meet the minimum requirements on this new deal that's kind of half funded from distributions on the other deal. And that's where you kind of get the compounding, right? Think of it like a snowball effect.
Yeah.
So I made one principal investment, and now money that's coming out of that one is helping me invest in the next one.
Right.
And then so on and so forth. And you only have to start adding a little bit more of new principal to make that snowball grow bigger and bigger and bigger.
Yeah, just you kind of got to feed the fire a little bit. I know we kind of talked about that a little bit pre-show here.
Feed the fire, right? And that for anybody listening, right, that's in a sales or commission type environment like myself, this can be a great model because you go to work and you use that as fuel and you keep adding it to your fire over here, right? And maybe you have a bunch of fires. Could be the equities market, could be your 401k, and maybe it's one of these deals, right? And encourage you to start small, whether it's with our deals that could be at a little higher entry point. There's some platforms out there where I listened to a podcast not too long ago. They had $5 minimum entries, right?
Yeah.
It's a good way to get yourself exposed. But the point is, you should be looking at how many ways can I take my sole income over here, that's your W-2, that's your sales, and diversify it into multiple recurring income streams.
Yeah, I like that point that you just made. We talk a lot about diversifying our investments, but not many people talk about diversifying our income streams. And the something can happen to whatever company you're working for. You could get laid off, and I come from a blue collar family, and that got talked a lot about amongst my father's friends and whatnot. They were nervous about layoffs and whatnot. This sounds like a perfect way to help shield yourself from events like this or other types of catastrophes. Another thing I want to circle back to is I mentioned my QRP. If people invest in this, this real estate, this type of investment, are they able to do this via a Roth vehicle and maybe earn tax-free returns on their money, or is this something that you kind of have to do the traditional route?
Yeah, mostly we're seeing folks either in that self-directed IRA or the traditional route. But I would encourage the listeners, again, if, we have some good deals, but we are not the only people out there. And there's a lot of different channels that folks can access out there. I mean, it's almost, to be honest, overwhelming once you go down this rabbit hole about what's possible in, I'll call it either alternative investing or the private investing space. So I have heard some folks doing some different stuff in the IRA space. I can't speak too specifically on the Roth side. Mm-hmm. I know in our investments, it's typically individual, entity, or self-directed IRA.
Gotcha. So you mentioned this can be overwhelming to people. Where are some good resources that you can point people to maybe start chipping away at that overwhelm and maybe streamline their learning about this, aside from just sitting down and listening to this podcast?
Absolutely. The internet has done amazing things, and there's a plethora of information out there. Bigger Pockets is probably a website that if any of your listeners, are into real estate investing at all, they've probably heard of it. It's one of the biggest, very good content on there. The forums are really good. They do a lot of free webinars. That's actually where I met the gentleman that ended up syndicating me into my first investment. So I'd encourage folks to just start there as a landing, like a home base. Then as you understand maybe assets that you like more, is it multifamily apartments? Is it self-storage? Is it mobile home parks? We happen to do all three, but maybe you find one and you want to go deeper, then just start to Google, and you'll come up with some specialized blogs, some really good people that have other podcasts that focus just on those assets. Our website has some good blog material on there as well. But Bigger Pockets, for especially someone who's a little bit newer to just the general concept of real estate investing, would be a great place to start. Ask questions. Everyone on there is really helpful. They have a podcast as well, which is highly informative and educational.
Yeah, actually, I haven't dug around on that website too, so maybe this is the kick in the pants for me to dig into that myself. Yeah,
and you'll find some people doing some really creative things as well. In all kinds of real estate.
Yep. And, this kind of circles back to, I don't know if we talked about this pre-show or actually on the show here, but, you moved down from Philly down to Atlanta, kind of facing the unknown.
Absolutely.
This is kind of plays along with, that there and people kind of facing an unknown new investment strategy possibly. So what are some of the, more of the abstract advice that you can give people kind of facing the unknown? They might want to take bigger control of their financial future, and they're nervous about stepping away from those traditional 401ks and stocks and bonds and whatnot.
Yep. Well, I definitely took the plunge there, and in where I come from, Philadelphia, a lot of people, it's kind of a self-contained world. A lot of people don't leave. Big Italian, Irish families. Yeah. I just happen to always have that personality. I studied in Europe when I was in college for 4 months, and that kind of opened my world up to just, new things, new people, new cultures, new adventures. So, I had a little hesitation, but, I thought, what's the worst that can happen? Let me just jump down and move to Atlanta. And through, building the staffing office and going through the 6 years, it's been an amazing growth experience. I've learned a lot about myself. I've had some of the hardest days and years that you can imagine. But what I'll say about facing the unknown is I think people just don't know what they don't know, and we're very it's very easy just to live in your own little box, and you kind of just get busy in your world. And I don't really go outside my lane, and I don't know anything about that. Or, I've heard some things about that, and that doesn't interest me. But did you ever actually do your own due diligence? Did you ever actually do your own investigation?
Yeah.
Talk to people in that world. And I think that goes for not only real estate investing, but just anything in life. Don't make your own judgment until you've done your own education for yourself. Have you done your own homework? Talk to people, then make your own formulated decision. Maybe real estate investing is not for everybody, and it's not, right? But you can't make that decision just because it's unfamiliar to you and it feels uncomfortable to talk about going into something unknown. I think people are very set in their ways and their routines, and it's just easier not to grow and stretch and expand themselves. And they're missing out.
Yeah, I totally agree with that. That's something that's very similar to what I experienced. I did 10 years of active duty in the military, and I always had this burning desire in the back of my mind that I should be going to school. I should be doing this. I should be doing all these things, checking all the boxes that society tells us we should be, checking. And, that kind of goes along with what you said there. People kind of, these companies offer these 401ks. That's what I should be doing. And,
and hey, I'm not immune to it. I about 2 years ago, I was kind of feeling a little bit in a rut, right? And this was actually right before I found 2 or 3 years ago, before I found the commercial real estate investing. I felt like there was something else I should be doing, something else I should be fulfilling my time with. I went and got an online master's degree, and I didn't really need it. I'm in sales, right? So, I just felt like that was what I was supposed to do, supposed to get the next degree, the next education. But I didn't really, if I was true to myself, that's not really what I was wanting. I just felt like it was what I was supposed to do. And I think people get caught up in that. And again, I'm not even immune to it. Yeah. Looking back on it now, I think I was just trying to fill a void that I needed something else in my life besides work, and that's all. So luckily, I found a side passion that also can help me stay more motivated during work and the sales, because I can further my income stream and accelerate my wealth creation.
Yeah, so there might be some people out there listening to this podcast right now that get a little gun shy about talking about money. And if you had, I was for some time myself gun shy about talking about money. But if you ask me, like, money is just another way for you to make your mark in the world and do good things. That's my opinion. What sort of words of wisdom might you have for people who are a little gun shy about money? It's always sometimes a taboo topic.
It definitely can be, but like it, hate it, love it. It's what makes the world go around, and you can't live without money, right? So money is not everything. By no means would I ever preach that. And like I mentioned with my father passing away, I think that's put that even more into perspective than ever. But what I will say is that money can be a means to a lot of different things, right? For me, I love to travel with my wife. We like to go new places. We like to try new things. And creating wealth for ourselves and creating income streams is the only way that we can do that, right? So you can't be scared to talk about money because you're not going to live without it. So I think people should understand that, harness it, and find ways to be, earning additional income streams in a very opportunistic economy like America offers, instead of getting shy about it or awkward about it. Take advantage, especially in the internet age. I mean, there's a million different ways outside of your primary income that you can be providing for you and your family. So I think, if anything, we should be talking more about money.
Yeah.
Because most people just don't know what they don't know, and they're just following the simple advice that's been passed down to them to put money over here, to buy a house when you should buy a house, to do this, to do that, right?
Yeah. It's better to talk about it up front before it becomes a larger issue. The stat is that's what causes the most divorces is money problems. So,
Yep.
That's probably the biggest way around it is to just talk about it all the time. One thing I need to implement in my household is to maybe have a weekly money meeting with my wife. We talk about it pretty regularly, but I want to.
Good idea.
I want to have it something that's a weekly routine.
That's a really good idea.
Part of our battle rhythm. But we're starting to run short on time here, man. I would love to sit here and chit chat with you for hours. I'm sure we can go on and on here. But if people are interested in learning more about what you and your group does, where can they find out more information?
Yeah, absolutely. Just create a quick little landing page just for your listeners. If they go to redrockcapitalgroup.com/0, we've got a couple of free little offers for them. Just a quick 7-page ebook, which will basically just really compress down everything we just talked about, which will walk them through how real estate syndication works and what its benefits are. And then 2, if they'd like, there's a link there to my calendar. They're free to schedule, an introductory conversation with me where we can dive a little deeper, maybe go a little bit more into some of what we talked about, talk about their financial goals, and we can see if this might be a fit for them now or down the future, or even if they just want to chat a little further about what they heard here. I'm happy to do that.
Awesome, man. Well, is there anything, any last words of wisdom you want to leave us with before we sign off? Anything we haven't covered here?
No, man, this has been great. And I think, like you said, your listeners, from listening to your show, they know it's all about stretching and getting out of your comfort zone. And like you said, there's no excuses not to at least investigate some alternative options to what you're doing right now.
All right, right on, man. Well, again, appreciate your time, and we'll stay in touch. We'll talk soon.
Been a pleasure, man.
Thank you for tuning in to the Zero Excuses podcast. Join the conversation at kenyanzitska.com in our Facebook group. And don't forget to rate and subscribe to our show. We'll talk to you next week. And always remember, results, not excuses.